potential. Our panelists will discuss how the consumer insight data can unlock new opportunities in lending. So Brenton couldn't be here today, but we do have Claude, who's the Director of Open Banking at MasterCard. So I'm just going to ask everyone to put their hands together for the panel.
Thanks everyone for joining. Appreciate you making the time. My name's Claude Maroon. As was mentioned, I'm Director of Open Banking at MasterCard. Nowhere near as good looking as Brenton. And I know this is being recorded, so let's play this one back for him. Joining me today, we've got Gavin Leon, General Manager of Open Banking and Digital Identity at CommBank, Jody Ross, Chief Risk and Compliance Officer at Timely, and Ben Milsom, Co-Founder and Chief Commercial Officer at Plenti. I can see a lot of familiar faces from the CDR ecosystem, so some of this may not be news, but I think it's maybe worthwhile setting the context for this panel and giving a flavour for what's going on at the moment. So the Minister recently announced and also spoke about yesterday in his keynote address that the CDR was going through what he's called a reset. I like to think of the CDR as kind of like we're on a ship and we're on this journey and we think we know where the destination is and we've embarked on that, but the compass was a few degrees off, and so we've continued on this journey, but we haven't quite gotten there yet, and so we need to re-steer the ship. And so the Minister has announced 3 key use cases that the CDR will get focused around. One of those is lending and borrowing, and that was top of the list. The second was small business, and in particular accounting services, but I think that extends to other use cases. And the third was around energy switching. And so what does it actually mean to get focused around the use cases? Well, there's a few changes that have been proposed and are under consultation at the moment. And those are fairly numerous and detailed, but I think the key ones really are streamlining the process for consumers to opt in or engage with the CDR rather. The second is around making it easier for small businesses or businesses more generally to nominate themselves for access to CDR. The third is some extensions to the circumstances where banks can have some restrictions taken away about how they use the data. And then the fourth was that non-bank lending would come into the regime designated from 2025 to come in by 2026. And so MasterCard has a really unique perspective. We see open banking evolving around the world globally. We've enabled millions of consumers to participate in the digital economy through open banking, and so we know the impact it can have when the settings are right, and I think that's what they're trying to achieve in Australia. So without further ado, I might throw over to the panel, maybe starting with Ben. I've just mentioned non-bank lending is going to come into the regime. So probably a two-part question. Number one, how do you see the obligations playing out as a data holder? And then the second part of that is, do you think what's being proposed is enough as a non-bank lender to participate as a recipient of that information and use it in your lending processes?
Yeah, thanks, Claude, and thanks for having me, and lovely to see everybody here today. For a background, Plenti is a non-bank lender. We finance predominantly across 3 key verticals: consumer, unsecured, renewable energy, and automotive. We call ourselves Australia's largest consumer fintech. We've got a loan book of about $2.3 billion. We work and direct broker a variety of different channels. So that gives you some sense of the perspective I'm coming from. Rather than get into the sort of nitty-gritty, I think I want to look at the announcements in August from a kind of holistic perspective. And I think two really clear-ish things that came out of the reset, if you want to call it that, was 2 things. One is the statement that lending is at least if not the main use case for CDR, an acknowledgement that that is what we are here to do with CDR most of the time, and that what we have right now doesn't let us do that in a meaningful sense or in an attractive sense. I think following from that, and I think framing a lot of the changes, an acknowledgement that the data standards need to balance benefits to consumers and costs. And I think that framing hadn't really been made, at least explicitly, before that point. And it's an acknowledgement that the perfect is the enemy of the good, and getting more people to be engaged in CDR is the most important thing, and having something that is useful and desirable for lenders to try and use it as an alternative to, at best, screen scraping, at worst, PDF bank statement uploads is vitally important. But when it really comes down to it, when you look at the detail, what has really changed? Consents, user experience, bundling of consents, all that kind of the number one bugbear that Jodie and I spoke at a recent panel, is improved. Great, hooray, yay. We've corrected that few degrees on the compass, to some extent. But when it comes to the fundamental kind of concerns we have with things like privacy safeguards and the derived data problems, no real change there. And the issue around the CDR just being a model that is just not fit for brokers to use. There's still no real solution there. And for non-bank lenders, a vast majority of the loans that they write come from the intermediated sector, whether that's loan comparison sites or brokers. Yes, we have this trusted advisor model, which for those of you who maybe aren't familiar with, allows you to nominate a mortgage broker as a sort of nominated person who can receive that data, and they can then deal with that data as they wish. There are obviously limitations. Not everyone's a mortgage broker, the consent process is difficult, but also just this fundamental conflict, which is, lenders who have, substantial security and licensing and governance processes apparently can't be trusted with consumer data to do as they wish. But mortgage brokers can be trusted to do anything they want with it. So it's a sort of bizarre world in which we live 1 foot in and 1 foot out. So I think the answer is we're not going to see other than the mandated requirement to be a data holder, which we're going to see, rampant from next year, we're not going to see non-bank lenders running to their nearest open banking vendor saying, please, I really need this now, please help me get on board. It will be very much oh God, I have to do this. Can you make this as least painful as possible while I consider my options to, get data through other channels, particularly if screen scraping is banned as it is proposed to be banned. So, I want to sign off my answer, and I appreciate I've taken my full time, which is that CDR fundamentally doesn't understand that lending isn't just making an application for a loan. Lending is everything from setting the risk policies to finding funds to lend to, accepting and approving an application, managing portfolios, iterating on products, and dealing with lots and lots of third parties. And at the moment, the CDR only lets you do one tiny bit of that, and that's been forgotten in this.
Thanks, Ben. Jodie, Gavin, any further comments on that?
I think I'll save my comments for maybe the question you're going to ask me shortly, Claude, because a lot of what Ben says really resonates with me, and I think there's some really good points there, but maybe I'll wait and jump in, or would you like me to do that now?
Any comments you like?
Well, when I think about the latest rules consultation that's occurred, I'm seeing we're really encouraged by what we're seeing, and I think Treasury is to be commended for listening to the concerns of industry and taking some positive steps forward. Agree, the consent flow is improving and bundling, and I think when you think about a lending origination journey, it was really important to include a disclosure consent in that because the nature of origination supply chains require that. Equally, when we think about opening up lending as a use case in CDR, it requires consumer uptake. And I think the rule change that will make it easier for ADIs or banks to receive CDR data as data holders is really significant. It actually, for ADIs, deals with the derived data problem you mentioned, Ben. And I think that's to be welcomed in that the reality is when it comes to lending, it's the banks who have the customer base to bring the volume and scale to really drive uptake in CDR, which is going to be vital. But it's not the complete solution. It still creates gaps. So when we think about the consent flow, there were improvements, we got rid of some ticks, but then we added information back in. So I'm hoping that Treasury will think about what we want is a net reduction in the amount of ticks and information that consumers have to navigate in order to give a consent. And I think the big gap in terms of derived data and lending is that non-bank lenders need to have the same ability to receive CDR data as data holders, just like the banks. And in my view, that should happen in advance of their compliance obligations commencing. We need to get data holders to see the opportunity of receiving CDR data, and if that could occur before the compliance obligations kick in, that would be fabulous. And you know what? It would actually meet the core competition objective of what CDR is. The sad thing about CDR is that we spend most of our time talking about it as a privacy regime rather than the fundamental competition reform it was actually supposed to be.
Totally.
And look, I suppose the final thing I'd say on gaps, and I think you were touching on this as well, Ben, is that there is a growing gap in terms of the, let's call them exemptions or slight loopholes that are being created in the rules to let use cases work. What about the stranded use cases? Or what about, if we think about a lending journey, what are the pro-consumer elements of that use case that aren't quite fitting into these rules? Let me give you an example. At Timely, we're really privileged to be able to support, as a technology provider, the home loan origination for a number of brands, including Up. And Up are doing something fabulous with Up Home and really nurturing their customer base on their savings journey to be able to apply for a home. I read these new rule changes, and whilst at the home loan application point those rules would kick in, the nurturing journey won't in terms of using open banking data. So I think we need to take a broader view.
Thanks, Jodie. Gavin, any further comments on this point?
Yeah, I think agree with a lot of the perspectives put forward already. I fully expect that what's been announced in terms of proposed changes at the rules level is just the beginning. There's going to be more, obviously, to support the priorities that the Minister Jones announced last month. So there will be more, I'm sure. I think trying to put myself in the shoes of Treasury, which is obviously dangerous, but trying to be empathetic, something that they need to balance is, how do we obviously make it easier for consumers to uptake the use of this service? I mean, consumers are not really going to think about the CDR. I think success is they just see good experiences and they're able to safely share their data to access products and services that they need. Obviously, industry needs to understand CDR, but the consumer itself shouldn't really be thinking about CDR. But for Treasury, in terms of rules and standards changes, is obviously balancing simplification and enabling more participation. But at the same time, consumers are properly informed in terms of what they're consenting to share and how that data is being used. So I think privacy principles and consumer information is still essential to balance.
Thanks, Gavin. And while you've got the floor, maybe just to change tact a little bit, we've spoken a little bit about consumer lending. On the small business side, which was the second part of the priorities that Minister Jones has announced, from a lending perspective, how do you think that we fast-track small business and help unlock some of the value in the ecosystem and for those consumers?
Yeah, I think there's a lot of potential for small business, and I have some friends that run small businesses, as I'm sure many of you do. They're very, very busy people, and accessing products and services can take a lot of time that they don't have. So I think in terms of fast-tracking that or unlocking greater value, like many things, it all starts with being consumer-focused. It was really pleasing to hear the Minister say last month that we need to put the consumer back into the consumer data right. I think that means a lot of things, though, to lots of people, but I'll give my top three of what I think that looks like. My top three are shifting from a sector-by-sector approach to a more consumer-centric approach, experimentation, and consumer testing and feedback. So in terms of shifting from that sector-by-sector to consumer-led approach, I think if the people involved in CDR now could jump in a time machine and go back to the time when we were setting out the scope and the approach for implementation, I strongly suspect we'd take a different approach to where we've landed. Hindsight is always a helpful but impossible thing. But I think one of the key things we do differently is, rather than go sector by sector in terms of bringing in data sets and scope, I'd like to think we'd have a more consumer-centric focus that is centered on what are those consumer life events or journeys that consumers need access to their data. And I think we all know from our own professional experience and life experience that the data required to unlock those use cases and the products and services that consumers need in those key life events, it's not all held in one sector. It's not all held in banking or energy. And there's I think, an inherent assumption, whether explicit or implicit, that consumers' interaction with banking can be met entirely by data that is held in the banking sector. Deloitte Economics did a study earlier this year that was released on CDR, and that one of the insights from that was there's about 46 key consumer data types, and out of that 46, banking holds somewhere in the order of 22, telcos hold 19, but interestingly, government holds 33 of those 46, consumer types. And so if I bring that to life in a small business lending case, things like ATO and ASIC data, if you're able to bring that into the CDR, that would enable consumers to safely and easily, share that data. Things like company registration, tax debt, the information that's in their BAS statements, being able to safely pull that into a lending process that today lenders typically create this more manual infrastructure middleware to enable that to be brought into their lending process. So I think the introduction of things like that simplifies it for the consumer. It takes time out of the process. It helps lenders reach that faster, more efficient decision. And that infrastructure would also extend to retail use cases. So for consumers who are, buying a home or wanting to get a personal loan for a car. So being able to use that information for income verification. In terms of experimentation, it's been fantastic to see the data standards body introduce experimentation to inform standards or potential future standards changes. I think there's an opportunity to extend that so that industry participants can collaborate and explore opportunities with new data sets to refine use cases and further inform standards changes in a controlled environment. It's also an incentive for participants as well. And then thirdly, conscious of time, consumer feedback. It's essential to keep consumer safety and privacy first, at the forefront as we think about changes and improving the CDR. We need to maintain trust. If that trust in the regime is broken, that obviously will severely impact uptake. And we obviously need to continue to get regular consumer feedback. I think we can do this better so that what we introduce is consumer friendly and it meets real needs.
Thanks, Gavin. I think it was a really pertinent point about access to other data sets like government data. It's not something that we actively consider, although the use cases are really clear around data that a consumer might need to share, or a small business, for example, if they're receiving government benefits or their ATO statements, as you've said. Maybe Ben, any further comments on what Gavin's just spoken about?
I mean, look, more data would be great. I think the big question for us is what's the right environment to be providing that data? The CDR framework, the same Deloitte report you mentioned, I think also was the one that the ABA relied on to say that, this has been the most expensive kind of per customer, technology innovation ever. We think that there are other models out there like the credit reporting world would probably provide things like ATO tax debt information or other liability information in a much more customer friendly, much more lender friendly environment. Our focus is really on the CDR needs to deliver on the core promise first before we get carried away on what other amazing things we could do with it. And the more we talk about, we could do this and we could do that, it kind of moves away from we just need to be able to get someone's bank statement from their main bank to our lending system in a simple, cheap, accessible format that means we can do basic things on it, like come back in 3 or 4 years' time and perform portfolio quality analysis on the lending decisions that we made. We can't even do that really, at the moment. So the potential is endless, but one step after the other, I think.
Thanks, Ben. Jody, further comments?
Just picking up on what you say about the consumer-centric focus of CDR and using that really as the North Star, which I completely agree with. I think it's really important that more attention is given to the type of consumers we're talking about here. CDR picks up both business consumers and, personal consumers. And I think one of the real problems we're seeing with uptake is in relation to the way in which we are trying, the CDR regulates customer data about a business as though it's a privacy issue, and it's not. In the outside world, the Privacy Act does not apply to business data. Yes, we have the issue of sole traders, but I think that's just loomed large over really key use cases that could drive uptake. And I think we then need to think, well, what's the reality today outside of CDR for those consumers, and let that inform what it means to give them control and choice and convenience in the CDR. And it's a pretty bold statement, but I would say that that needs to flow through to the way that business consumers can provide consent to share their data. If they're providing access to their accounts now to a range of people in their business, I see no reason why that can't by default include CDR data sharing. Businesses manage authorisations and delegations every day of the week, and it's in their control to change. And I think that's the kind of, we need to have bold thinking to solve the problems for uptake. And otherwise we run into the problem that we'll get the cost-benefit analysis argument again, and quite rightly the banks will say, well, we've got to change something. Where are you going to get the maximum value? Well, that's how you get the maximum value. So let's see what consumers are doing every day of the week.
Thanks, Jody. We might change tact a little bit and let's think forward 12 months. We're all sitting here on this panel. We're at Intersect next year. We've got the call up again. Using your crystal ball, what do you think it looks like in 12 months? And I'm hoping the answer isn't we're having the same conversation. And unfortunately, that's sometimes been the case in CDR world. But maybe, Gavin, over to you first. Where do you think we are in 12 months?
Yeah, it's a big question, and I think there's lots of possibilities in terms of where we land. But what we expect from what we heard from the Minister last month is by this time next year, we'll have clarity on the direction of screen scraping. He talked about the intention of, within 12 months of announcing what that future direction looks like. I imagine that looks like from a time frame perspective of screen scraping being banned and what that approach looks like. So I expect we'll have clarity on that. We'll have obviously clarity around the NBL scope and time frame for that being implemented, and I imagine implementation activities already underway. I think we'll see more use cases in market aligned with the priorities. I think we'll see more scope changes, as I mentioned before. I think we'll see growth in the number of ADRs, the number of use cases, and I hope we'll see consumer uptake increase as well. I think we'll also start to see benefits from CDR rules and standards changes that Treasury are currently consulting on to, ease the compliance burden for data holders, which I hope in turn encourages greater participation from large banks.
Thanks, Gavin. Jody, your thoughts?
Well, if I were a pessimist, I would say, and recognising the political reality we're living in the next little while with an election coming up next year, I'd say the downside scenario is not much changes and we maybe get the latest set of rules made and not much more. But I'm an optimist, and I think you have to be to have worked in CDR for the number of years I have and still be here, and I know there's many people in the audience who fall into the same category. So I'm going to be a pragmatic optimist and say that I think that we can, within the next 12 months, see some real change in uptake in the lending use case with these current rules, but it's going to require more. And I think it's going to require the government to set some meaningful KPIs to aim for CDR generally and for uptake of use cases, and to organise everyone around that, both government and industry. So I'd like to see maybe a change in the way we work together, a working group focus or something similar where we can get together and really talk through in a pragmatic way what are the remaining barriers to really unlocking this use case and work together to get there.
Thanks, Jody. Ben, I know you've given some thoughts about how the changes impact non-bank lending, or maybe not enough impact on kind of receiving the data. Do you think in 12 months there's going to be a material change, or what's your perspective?
I think if the dates are announced as we expect them to be in terms of accelerating particularly bigger non-bank lenders to become product data providers and then consumer data providers next year and the year after, in 12 months' time we will have seen the biggest non-bank providers, the big mortgage players, some of the big auto companies finally kind of really engage with open banking, which, to be honest with you, I think a lot of them haven't to date. And that will generate, I think, a number of new topics of conversation, because a lot of those organisations will have their views on the data models and other things they previously haven't been bothered to kind of voice. I think from a practical perspective, as a company who will be subject to this, we will be making the investments to become a data holder, and that'll be great for our customers and for our engagement with some of the people in this room in the ecosystem. I think we'll also be working on a backup plan, though, which is to say that if there's a change because of the election, or there's a stalling in the momentum to make the changes for whatever reason, we'll be continuing to, and we can see screen scraping bans on the horizon. We will no doubt be actively working on alternatives like greater use of OCR scanning for PDF bank statements, working with other lenders to create clearinghouses where that sort of non-tainted CDR data can be shared or tokenized. Because as it stands right now, it's just not practical for particularly asset finance-based lenders or non-mortgage-based non-bank lenders to make a big investment in this space. It puts you at a significant disadvantage to major lenders, to banks in particular, and we will have to find a more consumer-friendly and business-friendly way around the outside. So I think that's my parting message on all these things is that the comparison isn't screen scraping or no screen scraping. It's PDF bank statements, old-fashioned pictures sent to me via an iPhone versus screen scraping, and that's unfortunately, and for many people, the lowest path of resistance for what they want to do.
Thanks, Ben. I think we're almost at time, but just to give a couple of things a plug. So MasterCard earlier this year with FinTech Australia did a collaboration and published some information on the Australian open banking ecosystem, and published information about participation and access models that participants were using. We're now extending that into New Zealand, and so if there are any New Zealand fintechs in the room that are leveraging open banking type services in their businesses, we'd love to hear from you so that we can collate that information. So please reach out to me if you'd like to participate. The other thing is we've got a Women in Open Banking luncheon, which we're running today at 12 o'clock for Intersect. So for anyone in this room, please feel free to join that. You don't have to be a woman, but it is about supporting women in the ecosystem. So if you've got the time, please feel free to attend that. And if we can thank the panelists.
Okay, thank you, guys.